Hello and welcome to Money's Tip of the Week. I'm here this week with Olivia Maragna. Hi Olivia.
Good morning.
And today we're going to be talking about family trusts. Olivia, what are they? What's a family trust?
Well, a family trust is really a tax structure that you hold investments in. So I try and liken it to a little bit like a superannuation fund. So you're holding assets for the benefit of the members or beneficiaries. And really it's there to accumulate assets. But the great thing about it is you can actually distribute funds very, very tax efficiently, particularly to adult children.
Okay, and how do you go about setting one up? What do you need? Do you need a lot of money or not much money?
Yeah, so normally it does depend on personal circumstances. So keep in mind there are costs involved. So when you do have a family trust, you've got accounting fees and so on. So you need to make sure that the amount of income that you're actually earning in that family trust and the amount of tax that you're saving is really going to make that worthwhile. So really important to make sure you do the figures before you do it. As a general rule of thumb, at least a minimum of $200,000 to $300,000 in investment assets. But the great thing about it is once the assets are actually in that family trust, any capital gains or income going forward can then be distributed to the entire family from that point of view.
Okay, so you need to have a family, you need to have a spouse and some children for it to work.
Preferably adult children.
Adult children, so they need to be of a certain age?
Yeah, so anyone over the age of 18. So you've got to keep in mind children over the age of 18 can start to use the proper tax-free threshold. So it's around about $19,000. So if you can imagine a family trust that's, say, earning $40,000 worth of income, you may be able to distribute that to children without having to put that income in your own personal tax return and paying much higher marginal tax rates. So children do become very beneficial once they turn 18.
It's handy to have children making money for you. But it's not, you're not actually handing the money to the children, it's more of a sort of a notional distribution.
Well, I think this is the great thing with family trusts. So when you actually distribute, it's just for tax purposes. So what a lot of family trusts do is they reinvest those profits back into the family trust, and that's where they really start to create that beautiful level of wealth as sort of the years pass on.
Okay, so it's a great thing a way of making money, but are there pitfalls? Are there traps that people should watch out for?
Yeah, there certainly are. So the most important one is when you create a loss in your family trust. So if your income isn't as much as your expenses, so you're actually creating a loss, they're actually trapped in that family trust. So just be very mindful of that because you can't use those losses to offset your personal income. So just be very mindful of that, particularly where you do have shares. So where you've got those franking credits or imputation credits that a lot of people love about share income, you will lose those if you make a loss. So just be very mindful. Make sure you seek professional advice.
That's probably a good idea for this sort of thing. And they're very popular?
Absolutely. So I think, it's such a... I think with superannuation being tinkered with quite a lot, people are wanting an alternative to, instead of just putting my money in superannuation, to actually use family trusts to create wealth, but still be able to use it really tax effectively, but gain access to it. So it's a beautiful structure to have prior to retirement. So if you want to, say, for example, retire at 55, you can access the funds within the trust. Post that, you may have access to your superannuation. So a really lovely entity to build wealth, but also to, be able to manage your tax consequences as well.
So they sound great, but I think you've got to be aware of the pitfalls, but a very good way of making money.
Certainly something to consider.
Great. Good. Thank you, Olivia.
Thank you.
Thanks for watching. We'll see you again next time.